Welcome guys, this is going to be another video on the Wolfe wave. Today I was able to catch a nice setup of a Wolfe wave pattern that I guess could be argued with that is also a Wyckoff, but regardless it kind of touches the same base, which I will explain in the video. So what you're going to see is me live trading today. I took some snapshots of some key moments during the day where I was able to enter, and also how I manage my risk by moving my stop loss as at key moments by using an analysis of support and resistances, so analysis of price action. I'm currently working on a series on price action. I wasn't too satisfied with the last video that I've put out on it, so I'm going to work on a series, complete it, and then let it sit for a little bit, and then rewatch it and see if there's anything I want to improve, and then I will upload it for you guys. So I think you're going to enjoy that new series. So subscribe to the channel and like the video, and let's get on with this video, and I hope you enjoy. I think this is a great example of an accumulation pattern where you have at the end a bear trap where people that are shorting here get trapped, and it creates this what I call the pump and dump pattern, where it breaks out and then comes back to test the support. But usually I connect the second wave of the pattern with whatever high it makes after that before the retracement, and that gives me my a good point of entry. So I'm waiting for price to come back and test this zone here, and I'll go long, and then I'll add to my position if ever it penetrates this zone again. But I'm looking to buy in this area. All right, so I just went long. Price came into my area here, so I had placed an order just at the beginning, and just to test the water, and it got rejected right away. So I kind of like this. Price is heading higher as we speak. So I'm expecting this to be a slow process towards this zone, and if we break out of this zone, then I'll buy some more. All right, so price has clearly rebounded aggressively from that zone, so I think that was a good buy. What I've done now is I've put my stop loss here, because my original stop loss was at the this low here, and I think it's a little bit far for the kind of trade that I want to achieve today. So I've put my stop loss over here, and if we make a lower low, a higher low, and then penetrate on the upside, then I'll place my stop loss at my entry point and ride it for the rest of the day, or whatever point I think that it's no longer gonna make a move up. So we'll see. All right, quick update. The price went right through the zone of resistance here. It shot right up, and I didn't get a chance to add to my position because it didn't accumulate like I was hoping it would do. And in that case, I just move out. So what I'm going to do is I'm going to move my stop loss a little bit higher. So now I've locked in some profit, and for sure I'm making money on this trade now. And if it comes back in this zone, in this area here, I will probably add to my position. But for now, I'm not touching it because it's too much of a spike for me to buy at the highs like this. This is just not how I trade. To give a bit of context to the trade, let's go back to the 4-hour chart. I just want to show you what I saw. So we were coming from an uptrend, and we made a double top here, and it reversed, but then it got into this zone of support. And as it got inside of that zone, it made this candlestick here, which is a rejection candle with a body that is a wick that is bigger than the body. And that made me go onto a smaller time frame when I saw the structure of these waves, and that's how I went into the first I started with the 30-minute time frame, and then I traced my 1 2 3 4 5 pattern, which then this could be used as a it could work, I guess, as a Wolfe wave, a reversed Wolfe wave, or a Wyckoff accumulation. It's just there. I think most of these patterns are explaining the same thing, basically, which is a shift in supply by a bear trap within a pattern. And then I waited for the price to penetrate, and then when I saw the retracement, I was able to buy exactly at the low by tracing my trend line over here. And now I'm well in position in my trade, and I will, it keeps going up. Now it reached the second wave, so I'm gonna move my stop loss a little bit higher here to lock in some more profits, but I wanna give it room because it's really possible that it will come back down and it will still be a good long for a longer term pattern to trade. Because if we look at the weekly, we saw that we have this big dump that we had at the same time as the stock market, and then it had this nice accumulation zone that we could probably see better on the daily. And this is a pattern that I trade. Maybe I'll explain it one day, but to me this is not finished, because we still have this this zone of highs here to reach. And if I were to guess, I think here would be a nice area. Yeah, that's where it touched. Then here, and then this high with this one would be a nice zone. So what I'm guessing this is doing is basically it retraced within that zone just to test this previous zone of support and resistance, which actually stretches all the way here. That's a very important zone. And now we just barely started. So I was able to really go long at the at one of the best moments to get in without trying to catch a knife, a falling knife, as I often say. So now what I'm expecting is for price to go at least to this zone. So I'm going to look for reasons to add to my position, but I want to give it room because it's possible that it's going to retrace, but it's still a bullish trend right now. So I don't want to be stopped out for no reason. So I want to lock in some profit, but not to the extent where I lose the opportunity, which is much bigger in the grand scheme of things. I want to take the time to answer a question from one of the subscribers. His name is Monkas Astley on YouTube, and he asks, can the Wolfe wave act as a continuation pattern, and would it be classed as a continuation in this case? And to me, it is a reversal pattern, but depending on how much you zoom out of the chart, you can see here that it's clearly an uptrend. So this would be a corrective wave within an uptrend. But if you zoom out, if you zoom in actually on the 30-minute chart, then this is a downtrend, and this was the reversal pattern that ended that small downtrend. So it is still a reversal pattern, but depending on your time horizon, you can use it to jump inside of an existing long-term trend. So good question, actually, but no, I don't think it's a continuation pattern, but I do think that with multiple time frame analysis, you could use it as such. This trade, it might take a few days to finish, so I don't think my my exit will be today. So I'm gonna stop the video here and maybe do an update later or something like that. But I wanted to talk also about the target. If it's a Wolfe wave, the target would be somewhere around there, and the time at which it would do this, according to the theory, but I would actually have to connect it like this, would be very soon. If you look at this, this is the X that marks the spot. So according to the Wolfe wave theory, this is the exact time where price would be where you would take your profits. But I don't believe this is going to happen. So I think that what I want to end on is to tell you that all these patterns of Wyckoff and Wolfe waves and things like that, they are useful because if you understand the theory behind them, then you know that you can identify supply shifts, moments where the big money traps the retail investor or other whales, smaller or whales that are cut in a movement. And I think that supply shift is basically how I adapted my trading, is that I wait, like 95% of the time, I have no idea what's going to happen to the price aside from moving from support to resistances. But once in a while, you spot a pattern like this where it's a bear trap, actually. And everyone that got short here are stuck, and it creates this big spike because people have to get out because they're out of the money, and this brings in more buyers, and it's just a chain reaction basically. And that's why these price moves are so aggressive, and that's why I trade them. But regardless of how you call them, what I want you to take away from this is that you trade the bear trap, and then you place it, you trace your supports, your resistances, and your trend lines, and then you pick a nice entry. You manage your risk, you put a stop loss out to make sure that if you're wrong, that you're getting out, and then you carefully monitor the position to protect your entry as soon as you can, but it has to make sense. That has to be based on supports and resistances and price action, and then eventually lock in some profits to make sure that you live to fight another day in the arena of trading. So I hope you guys enjoyed this video where I do actual trading, where I don't just throw theory at you and then try to sell you a course for 300 bucks. My content is all free on my channel, and I hope you enjoy it. So please like the video and subscribe to the channel, and I'll see you in the next one.